Hey guys, Akil here. Just wrapped up our live trading room and wanted to share one of the trades that we had on our radar for this midweek markup video. Remember, if you're watching this and you're not subscribed, make sure you do that. Make sure you hit that notification bell. That way you don't miss it. There's no email coming out to remind you of this. But after going through a handful of trading opportunities today, and I got a really good one on Euro Swiss, but I wanted to share this one here on Ethereum. Because it's different. I don't really look at crypto. I did get a question the other day about if I can start looking at some crypto pairs, and I said yes, right? Analysis is analysis. We look at it every once in a while in a live trading room, but I don't personally trade it, so I'm not too invested in looking at it. But this will show you how the same concepts apply. And we're looking here on the daily, right? We can see that the most recent move was a big dip, right? A big dip down to previous structure. And we saw a little bit of rejection at these lows before we started consolidating. And there are two opportunities that are on the radar here for me. One is going to be an advanced pattern formation. One is going to be more of a classic pattern formation in the form of a bear flag. One is also going to be more long-term. One is going to be more short-term, right? So if we go down to the 4-hour chart here, right? We're going to look at the most recent move that price has made. It's been stuck in a level of consolidation. And we know that these pattern formations tend to form when price is in consolidation. And I want to look at this first move right here, right? This is going to be our initial move is going to be called our X to A, right? Our swing low to swing high. This is going to be my X to A, the first move of my advanced pattern formation. This move right here is going to be my A to B. Now, what you want to do is you want to check price action here, right? Because we are sitting right on that 618 retracement. And there's a big difference between if we hit it and if we don't hit it. So I'm going to go over to my sidebar here on the right and just get an exact price. You can see the low of this candle of that B leg is going to be 2182.89. You can see my 618 is 2183.69. So I know for sure that we did hit it. This is going to make this a Gartley pattern instead of a bat pattern. Again, we have clear, concise, black or white rules on whether it is one pattern or another pattern based on the Fibonacci requirements that were hit, right? So knowing that information, that tells me exactly where I can expect my decompletion. I'm going to take my Fibonacci extension tool, drag it from the swing high, the A leg, to my swing low, the B leg right there. And this 127 extension, which lines up right with my 786 Fibonacci retracement, is going to be my projection point for where this pattern is going to complete. Looking like this: X to A to B, got to draw it again, excuse me, B to C, and a CD completion right here. That starts the zone of completion, right? That zone is going to go from this level down to the lows, right? Lining up right with this previous level of structure support. If we zoom out, not a bad place to look to get long. We are right at support. We know that our risk needs to be below that level. Puts us in a very nice opportunity if you're someone looking to get long here. Now, shorter term, and hopefully this is still around by the time you see this video, but we've got a bear flag, right? So if we look at shorter term price action, I'll delete some of the charts right here. We look at a higher level of previous structure support, right? Which comes right here. You can see price action came up, right? And we hit support, did a little dance up here. We came down, same level, found support, came up again, found support, came up again. This time, looked like we were gonna find support, and then boom, we blew right through with a bearish break. Since then, we've started consolidating on the way up. And this is going to give us a flag pattern. This is a little bit of relief in the market, right? This is a flag pattern which lines up with our analysis, right? If you're familiar with our IPDE process, right? Identify, predict, decide, execute. We identify that price has broken structure that allows us to predict that price is likely to go lower. So we have a bear flag lining up with an overall prediction that price is likely to go lower. This is going to be a good setup for a potential short. So you can look to get this short. Our next level of structure is going to be these previous lows right down there. If we draw in a Fibonacci extension, this should line up with a 127, just eyeballing it, swing high to swing low of our flagpole and back up. Ooh, baby, right there, 127 extension, decent opportunity to get short. Now, if you have any questions about this, just leave me a comment underneath this video. I do read each and every one of them. I hope you guys enjoyed. Make sure you subscribe. That way you don't miss the weekend video, and that way you don't miss the next midweek markup.